Hello, ladies and gentlemen. Today is the 19th of July. We've had a quiet week in the markets, although we had some reasonable numbers. I'll start off just summarizing what we learnt, which is nothing new. CPI and PPI were more or less as expected. We have seen some small effect from tariffs pushing up the expected core PCE towards year end. So we think that Powell is probably correct in keeping rates steady for the time being. Although Waller will argue for a rate cut in July, it's very unlikely that we will get one. I think the odds are in the single digits, and the market is pricing them there, and it's correct to do so. Retail sales, again, blew it out of the park, as it were, and it just shows the amazing resilience of the US consumer. While there is absolutely no change in the employment situation, nobody's getting fired as yet, but no one is getting hired either. Companies are in limbo, they're waiting for the tariff resolution, and on that front, we are getting conflicting news. It looks like the Trump administration would probably like to push tariffs higher towards the 15 to 20% baseline, and that can't really be bullish for equities in the long term. GDP growth is likely to stagnate unless you get much lower interest rates and they try to run the economy hot that way. And that's probably why the Trump rhetoric against Powell is at all-time highs, as it were. We're getting almost daily attacks from either Trump or his minions trying to move Powell towards cutting rates sooner rather than later. But that would have significant risks for inflation, and therefore it would have significant risks for bond pricing. And we think that would probably be counterproductive for the economy. We think that equities would lose their shine. Certainly if bonds went to 5.25%, you would get a re-rating of the multiple, and that really wouldn't be good. For the time being, everything, including bonds and equities, are trading very close to record low levels of volatility, implying that they don't see much happening in the near future. That's probably correct. It's certainly not going to be correct after QRA, which happens on the 28th, the first part, and the 30th. We will give you our thoughts next week and trades to have ready for that. But what do you think, Andy? What do you see as having happened last week or that will happen next week that would change our view as to where the economy is and where the risk-reward lies, in which direction? I think for now we're not really seeing anything to change our current disposition of where we are and what GDP going forward is going to be.
Yeah, for months now, we've been talking about this period of time evidencing a slowdown. And on face, you look at the numbers and you say, they're all coming basically in line. And so there have been some negative surprises on the data, but by and large, the headline data is really quite, I think Jamie Dimon said it, it's never been as difficult to interpret headline data. And so what I do is I step back and I say, what's going to drive GDP? And currently, the 70% of the economy is consumption. While Nick is correct in saying it appears the consumer is fairly resilient, consumer expenditures, personal consumption expenditure, which is the consumption number for the real economy, is flat, literally flat for the year. So it's exhibiting 0% growth. And trend growth is 1.8, 1.9%. So when you step back and look at it over a longer period of time, the slowdown that we predicted, the slowdown that is now being realized. And so for us, it's really a question of how slow will it get? Probably not very slow, but can anything be done to reverse that slowdown? And that's going to be things like significantly relaxing the current tariffs, which are set to go in place on August 1st. Next week's going to be quite a week, not this coming week, but the week next. It's going to be quite a week. And deregulation steps, which have yet to be announced, are the things that could stimulate growth beyond monetary policy conditions. And so last week, nothing really happened, except a lot happened in that Trump legitimately has been negative on Powell for a while, and every day says something negative on Powell, but he legitimately made a trial balloon and then leaked it about firing Powell. He said he might, but this time it was like, I've got the paper in my hand that will fire Powell. And it's interesting. You have to look at what the markets did. The front end rallied, expectations of a dovish replacement, cutting interest rates. The long end sold off heavily. Gold ripped higher. And stocks, which you would expect extreme dovishness to be great for stocks, sold off hard. Bonds, of course, long-term bonds sold off hard. And the dollar sold off hard. That lasted 3 hours, maybe even less, before he popped the trial balloon and said, no, I'm not going to fire Powell. That whole thing is about whether the Fed is going to be independent or not. And we're leaning toward a position where the Fed is less likely to be as independent. Whether it's independent or not, the level of independence is irrelevant. We can argue on whether the Fed is or isn't independent. For instance, in times of crisis, the entire government aligns perfectly together. It's in times of non-crisis when you expect some deviation between the administration and the Fed because they have different interests. That level of independence seems to be threatened. And that's not good for the dollar. It's great for gold. It may be good for stocks. It's not good for bonds, but it's good for a steepener. And so we saw that play out in the trial balloon. And I thought that was interesting. The rest of the week, in terms of price action, as Nick said, things didn't really go anywhere. We ended up near the all-time highs, which is fine. But you also have to recognize that it was a pretty active expiration week and some relatively normal flows of selling on Wednesday, buying on Thursday, selling on Friday, really drove the market in the very short term. So we come into next week, and I don't see much data. By the way, we had earnings last week. I think it's worth mentioning. Banks blew the doors off. So expectations have been driven down heavily for Q2. Why? Because of tariff uncertainty. And so, not surprisingly, earnings are beating. Now, they always tend to beat expectation, but the expectations were low and they're beating low expectations. And the stocks are not performing. Netflix is down 10% from its June high. And the banks all, except for one or two, Citibank in particular, all performed pretty poorly on their earnings. So you look at those sort of things and say, okay, we're going to get more of that next week. There's not a lot of tech that reports, so we still have that to come during this.
It's the week after. Everything's the week after.
During this fascinating week. So we come into this week and say, well, there's not much to say.
Yeah.
So we have a lot to say next week, and that'll be a hell of an episode.
No, absolutely. And we will have everything ready for you, what the world looks like if they change the QRA and what the world looks like if they don't change the QRA, and a whole slew of trades ready to go, and some option trades for the people who want to do those, to do either this Friday, and I will talk about that in my section, or on Monday, not this Monday coming, but the Monday the 28th. We will do some option plays, just very cheap ones, so we have something on in case they do change the QRA. Because if they do change it, we are in a different world, and we know exactly what that world, or we think we know exactly what that world should look like. Otherwise, next week, very light on data, right? We have some 20 years and 10-year tips. Powell speaks, and he could use the opportunity to push back against the need for lower rates, but we shall see. The ECB meets, but really they're not going to do anything, and they're off for their long holiday until September. And therefore, it's really not going to be an interesting week, but the one after this one is going to be a blockbuster.
Yeah, prepare for the week. There's nothing wrong with having no positions or light positions. Our beta positions, your two graybeards positions, are light, but they're highly flexible. And the week after next is pretty binary. You're going to have one type of portfolio in one circumstance and another in other circumstance. And this is where we provide you our best guidance. When something is going to be a radical change, or could be a radical change in one direction or the other, and we take action.
Great. Thank you very much indeed, Andy. See you next week.
See you next.